All right, this is Obaid on behalf of V Electronics. And in this video, we're going to talk about foreign exchange, okay, as well as exchange rates. Now, when it comes to exchange rate has to do with price of one currency over the other currency. Okay, so you have your exchange rate over here, exchange rate. And your exchange rate is basically the price of one currency over the other currency. All right, so this basically means that if you have US dollar, let's say you've got US dollar, and if you're trying to figure out the currency, a exchange rate from US dollar to, let's say, euro, okay, this has to do with exchange rates or foreign exchange rates. Okay, now when it comes to exchange rates, you've got four kinds of players who play in the market. Okay, number one has to do with international importers and exporters of goods. We're talking about international trade. Okay, so this is international trade. International trade. And this international trade has to do with international import and export of goods. International import and export of goods. All right, so one nation buys goods, one nation imports, okay, the other one will export. Similarly, if you have one country that's importing, they might also export goods at the same time. So you have what we know as a trade. Okay, so this is trade. Now we've talked about trade balance in the past, whether there's a trade deficit or a trade surplus. It has to do with import and export. All right, now the second player in this game, when it comes to foreign exchange, has to do with international investors who buy properties and real estate, for example. Okay, so international investors who own a foreign firm. Okay, so international investors, international investors who own a foreign firm. Okay, or who own a foreign firm. Okay, so for example, if you have a company like Amazon, we're not saying it would be Amazon, but if you have a company like Amazon and international investors invest in that company, you have investment in a foreign firm. Okay, so in this case, you have investment in a foreign firm. All right. Now, apart from international investors who invest in a foreign firm, you also have international investors, okay, who make financial investments. All right. So you have international investors, international, international investors, okay, who make financial investments. And we've talked about financial capital back in the past. So when investors invest in banks, for example, they're investing in financial capital, which may or may not raise your GDP. Okay, depending on whether that financial capital is used for production. Okay, so international investors who invest in financial capital. And apart from financial capital, you also have tourism. All right, so tourism bring in foreign currency, and sometimes they exchange that foreign currency to spend in the local market. Okay, so you've got tourism over here. Okay, so this is exchange of foreign currency. All right, so these are the four players, okay, or let's say four components when it comes to international and foreign exchange. Okay, on behalf of V Electronics, this is Obey. Have yourself a great day.